Hey guys, Mike here. So, oh boy, finally a green day. The NASDAQ breaks its 6-day losing streak. How about that? And the morning was kind of iffy, right? I mean, we were green when I was putting out, the members' morning news brief, and then all of a sudden some news came out from the Wall Street Journal. There's going to be a 75 basis point hike next week. And so people are figuring somebody in the Fed's whispering in that author's ear. And so immediately we go red. And then, can't believe it, guess what? We end up green for the day, as you can see. I mean, everything but oil basically across the board was green. I mean, if you own Tupperware, congratulations, up 20%. But you can see it don't matter if it's banks, if it's travel, if it's got to do with the metals, crypto, the stores, Chinese stocks, fintech stocks, semiconductor stocks. Really didn't matter at all. The big boys all green today across the board. Even ARK finally had a little love given to it. And so the indexes ended up nicely. But again, what do you see? That 618 Fibonacci retracement level. I told you yesterday it was hugging. The bulls won't give it up, and the bears too scared to really short it down hard at this level. And so you get a nice little technical bounce. And I told you before, what I'm looking for is this right here, to see what the bond traders think, right? So this is the high yield corporate bond ETF that we talked about weeks ago. And I think it was like, I showed you guys in a video a couple weeks ago where, the bond market was saying, get out, we don't believe in this rally. And they've been selling off ever since, just bouncing off that trend line. Well, it broke through the trend line today, and so they're kind of following in unison. So that's what I'm waiting to see, if bond investors are, believing this is going to be a 75 basis point hike, and then the Fed, they're good with them just doing 50 and 25 later on in the last couple meetings, and just see what they think, because obviously bond investors tend to be, are known to be the smarter investors because there's less manipulation as far as what I've been told. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. And this is the big thing we're waiting on, right? To see what the interest rate hike is going to be. And it's actually going up quite a bit. I mean, before, this was like a 65% chance it was going to be 75 basis points. Now it's up to 80 and only 20 on the 50 basis points, right? And some people say this is a big deal. I guess you can say that, whether they do it now or later. And of course, why this is a big deal is because obviously we talked about this a little bit yesterday, but corporate funding for debt, right? And so you can see it's at a 13-year high now. And so it is getting more expensive to take out corporate debt right now. And I even read a lot of companies are going ahead and they're issuing bonds now before it gets too expensive. I guess they keep seeing this going up, so they'd rather just do it now and take on the debt. And so it might be a smart move. We'll have to see. But there was something I sent out to the members I thought was really interesting of what fund managers are actually doing right now, or what funds in general, the big money, and what it's doing and everything like that. And you can see right here, this is in the morning news brief, where it says hedge funds have raised exposure in back-to-back weeks. Data from Goldman Sachs Incorporated Prime Brokerage show increasing short sales via macro products such as index/futures while buying shares of individual firms. The moves resulted in their busiest week by notional trading volume in a year. The same trends were observed by Morgan Stanley, where hedge fund clients boosted holdings in single stock in areas such as technology and healthcare, while adding shorts against exchange-traded funds. And what's important about this is the equity activity also marks a reversal from what hedge funds were doing most of the year, unwinding risky bets or degrossing amid heightened market volatility. The latest move is indicating increased willingness by managers to play offense in micro situations while hedging beta risk using ETF/index instruments. And so I think it is important to know what they're doing, right? So they're changing up their game plans. That's where you're going to see a lot of big money moving out of. And why? I mean, it's pretty simple, really. If you think about, beginning of the year versus now, a lot of these individual names they're going into have been just hammered, right? So they're willing to take that bet. And either we don't know if it's for the long term or whether they're just going to play a short term, another bear market rally up, and we see how fast these stocks can move, going up 50 to 100% in like 4 to 8 weeks, right? So that's what we don't know. But I know I even also saw today where, people were just buying, the bearishness just went crazy all of a sudden. People were just buying puts at like record levels and things like that. So that's another reason you're seeing the market move all over the place. The market makers don't want to pay out that money. And so they're trying to kill the put premium in the morning if there's a lot of puts called, and then turn right back around and kill the call premiums, and all kinds of stuff is happening right now. That's why it's just so volatile up and down. You see look at the VIX today, how far it was down, how far it was up 2 days ago. And so that we might as well buckle up and get used to. And another thing to watch out for is this right here, and I love this chart right here. This is CPI year-over-year percentage versus average of ISM manufacturing and services prices paid. And so it says right CPI, all items inflation, to have soon, so to be cut in half. And you see the difference right here, what the manufacturers are basically paying, and then basically what Walmart and the rest of them are charging us. So that's a huge gap, right? Now, mind you, CPI, especially year-over-year, I mean, it doesn't mean anything. It's the core inflation that the Fed is worried about. But this is what we're talking about. We need companies to actually bring down the prices, because if you look across right here, going back to 99, I mean, they're back down to almost like a normal level almost versus where we're at. I mean, look at that. That's a big gap. And so, and that has to close, and it can close quickly. It just depends on what companies end up doing and whether or not they actually end up lowering prices, or they do what the car, dealerships are doing and adding 10,000 on top of sticker price, right? With that market adjustment fee they're putting on and stuff. And I did talk to the person I was talking about, and they actually went to another place and they only put 3,500 up on the market. They were talking down 10,000 to 3,500. By looking at you guys' comments, and I appreciate it, it seems like, yeah, that's kind of what's going on. And I know Ford CEO had come out a while ago and told the dealerships to knock that off. But they can't so much control what they do, right? Because they don't own the dealerships. And so, but they do have influence over them. So, my best advice for anybody looking to buy a car, if you got to buy it, and you can't really do the used cars because the prices are unbelievable for used cars right now. And so if you do, email the manufacturer first, and they'll ask you for the dealerships you've gone to and see if they can reach out and, see if they can help you on that. But this is, you see the difference in that, right? Like, this is why inflation could come down pretty fast. The overall CPI, the core won't. It's a whole different story. Most of that's with housing and stuff like that. Rents aren't going to drop off a cliff or anything like that anytime soon. But, that this part could. And so would that be good for the market, though? Of course it'd be good for the market. This is great, and it's good for us, too. Right? I told you yesterday, I see our grocery bill coming down. I see the gas prices are coming down. My utility bill's actually still higher than it's ever been. But, and I don't rent. We have a mortgage locked in, thank God. So I know rents, as far as I can see around in the area, isn't going down either. But, I just wanted you to see, because I knew this was going to, you were going to, and I think most of us knew, that the manufacturing costs were going to come down. But it takes a long time to get through the system. And the last thing I was going to talk about was, I always bring this to you. I don't know, do monopolies just not exist anymore? It's like, you look at Google, for example, because Apple's rolling out their iPhones, and some data got released today. And I just didn't realize, like, how the market share of Android was as large as it was on a global scale. But look at this chart. I mean, that is insane, right? I mean, here's iOS right above them, and then everybody else is basically just the slivers on the chart up there. But look at Google. I mean, that is crazy, right? And I mean, they own like 90% of like search engine traffic or something around the world, I believe it is. I mean, that's amazing that a company can have a system on these cell phones and whatever else gets used in their tablets, I believe, and then also the search engine, and have that large a percentage of the both areas. I mean, that's amazing. So I don't know, do monopolies not exist anymore? Do we not break them up? I don't know what to say about that. I mean, I know they own the government and they write checks to them, I guess. But, I always tell people that's not good. When very few companies own large portions of the market like that, and because it just kills competition. And the small guys definitely can't compete, right? They'll just either buy them out or crush them. And so, I mean, that's what Walmart does with their supplier. They did a research paper with them one time, and they're just so large that they would, tell their suppliers, well, we're not going to do business with you if you do business with so-and-so over here, one of their competitors. And of course, Walmart's bigger, they get more money from them, so they're like, okay, fine. And they would cut off their competitors, and then they're left scrambling, trying to find a new supplier for whatever it is, and at the same price. So, that kind of stuff, you get these conglomerates like we got in this country, it's not good. I always say the Amazon effect. When Amazon moves into an area, I remember I'm from Troy, Alabama originally, and Walmart was they had the Walmart effect too. Walmart had moved in many years ago, and we had a town square, all kinds of mom and pop stores, been around for years, decades, all boarded up within a year, right? We had grocery stores, family owned for years, all gone. Because you can't compete with them. There's no way to compete with those big companies like that, especially now. They're way bigger than they were even back then. And so, and unfortunately, especially when they come in these smaller areas and take over, they become like the number one employer. Well, guess what that does too? Now they have more power over what they pay. and they can lower those pay and lower those benefits, because where are you going to go? We've already ran everybody else out of business, right? In major cities, Atlanta, New York, LA, that kind of stuff, that's different. I mean, you got plenty of people you can go work for, but you know, it's just amazing. I just wanted to bring it to you and get your input, what you thought about that, because I had no idea Android was that big on a global scale. So anyway, hope you got something out of it. We'll get to see if we have another green day tomorrow or not. I think you're going to see a whole bunch. I mean, there's no doubt people are shorting this market like crazy. And we're at that level where I think people are covering shorts too, trying to protect themselves just in case for a bounce. And so again, I think we're going to be just range bound, right? 3,800 to 4,100, somewhere in there, until we get that data next week. But anyway, hope you guys have a good one, and I'll see you tomorrow.